Hello, chart watchers and DecisionPoint faithful. Welcome to this January 31st, 2022 Monday episode of DecisionPoint. My name's Erin Swenlin from DecisionPoint.com. My father is unable to join us for today's show, but we have lots to cover. Everything's fine with him. It's just he has something he had to do, so no worries. All right, so what are we going to cover today? I'm going to get right on into it. We're going to look at the market. Certainly two really nice finishes for the S&P 500. We'll take a quick peek at the indicators, let you know what we're thinking. This happens to be the very last day of the month, so all of our monthly charts are final for the month. And so we can look at those, see what the indicators are doing. I'll take a peek at some of the monthly charts for the NASDAQ. We'll look at it for the SPY and the big four that we usually do look at, which is oil, bonds, gold, and the dollar. Then I want to go through with what time we have left, a really quick look at the sector and industry group summaries. Give you an idea of where the strength is coming in and give us an idea of where we might want to take advantage of some of this near-term strength. Although consider it in the short term. I wouldn't be looking at longs in terms of long buy and holds, but certainly you could take advantage of some of the strength that we're seeing this week. So I'm going to be presenting you with two diamonds of the week that you can look at and make a determination with. I'm not a registered investment advisor, so again, all trading decisions are your own, but I do have some interesting charts for you to look at. Before I get started, I wanted to tell you about our live trading room that we do on Mondays at noon Eastern. It's free to register. You can just go to our homepage. You'll see the picture of me, looks just like this. Click on it and you can register. You only have to register once because I do it every week, and you'll get notification about an hour before I start. We look at the market, what's happening, and then I take symbol requests, answer your questions. Lots of fun. All right, our DecisionPoint sector scoreboard has been going through quite a few changes. We've gotten a lot of what we call dark crosses of the 20 and 50-day EMAs. Dark crosses are causing these neutral signals. So when the 20 drops below the 50, if that crossover occurs above the 200-day EMA, meaning you have a bullish bias to the chart because the 50 is above the 200. So when you get those negative dark crosses of the 20 and 50 and they are above the 200, that is a neutral signal. So that means fully hedged or in cash. And we won't go to a sell signal on dark crosses unless those occur beneath the 200-day EMA. So currently we have XLU still on a silver cross buy signal, XLE, not a surprise with energy being on a buy signal, one of the bright spots throughout the volatile period we've been experiencing, and the defensive area of consumer staples still on a buy. We only have one long-term trend model sell, and that is a death cross when you get those death crosses of the 50 and 200. And right now, currently, communication services is the only sell signal that we have currently running. So let's go ahead and look at some of these charts that I have for you. So enjoy this short-term strength. I am not of the opinion that we're going to see follow through back up to all-time highs here. I think that this is a pause in the decline that we're having. I talked about bear market reversal, bear market rallies. Granted, officially, we aren't considered in a bear market, but this has been a pretty steep correction. I don't think we're done. So clearly, this obviously 2 days of really good action. I did actually redraw the flag on our bearish flag formation. We did see a little bit of a breakout if you were running the flag not on these two tops. And it lines up pretty nicely with those two bottoms. So we still have a reverse flag. Yes, we got above this area of overhead resistance, but we're still sitting right on that 20-day moving average EMA. So that is a problem for me. The VIX has been rising on our inverted scale, so readings are getting smaller, meaning that the investors are getting a little less bearish or fearful. They're starting to come back, trickle back here and into the market. I would also note that we have very high total volume today. When we look at this on the 1-year chart, you know, it looks pretty good, right, with this bottom here. But this breach of the 200-day EMA is the big problem for me. We haven't gotten those breaches below that level unless you go back and look a few years back. We don't get these breaches of that 200-day EMA, but when we do, we generally see a bear market setup here. So here's, let's bring it back another couple of months to see 2018, if we can get 2018 in there. We'll just make it another 3 years and then we know we'll get it. So again, the last time we saw that breach of that 200-day EMA, it was in 2018 going into that bear market. So that's why I don't think we're really free and clear here. This looks a lot like what happened back here when we started in 2020 on that bear market decline. We had some nice little rebound there, got us back above the 200, but then immediately began to fail. I think that's what we're looking at right now. Let's look at our short-term indicators. And you can see that we were very, very oversold. So we needed these couple of days of higher prices and this pause in general to start seeing these oversold conditions go away. And that's what I've been looking for, because short term, with the overbought conditions as they were, we really needed to see some upside movement, a pause, some sideways action. All of that would really work in our favor. And so far it has, as far as these short-term indicators, but now they're not oversold. So now they have room to go back down and move back into an oversold condition, meaning they can accommodate more downside without being oversold. So that's another problem for me. Our silver and golden crosses. Looks like the silver cross is held steady, but it has been declining quite a bit. It has reached some oversold territory here, but again, when we're talking bear market correction, you usually are going to see deeper lows on that reading on the silver cross index. Golden cross index has continued to be in decline. We have about 3/4 of the S&P right now with golden crosses of 50 above their 200. All right, I talked a little bit about, let's see, one more chart here in the indicators. We have oversold indicators in the intermediate term, but they are not as oversold as I would expect them to get, given the situation we're in now. And I could, again, bring this chart back out a little bit further. Let's just do that by a year, add another year on there. And you can see even back here for that correction in 2018, that first leg, we had oversold conditions that were more oversold than what we have now. And then at the end of that 2018 bear market, you can see that readings did get much lower. So that's why I am still concerned about the market in the intermediate and longer terms. All right, well, let's look at a few monthly charts here. Monthly on the SPY, we have the parabolic advance coming up through here, with the exception, of course, of the bear market that dropped down through it. But we have this parabolic advance, and this month we finally saw a breach. And not only a breach of the parabolic here, but a breach of that 12-month EMA, which kind of lines up with that 200-day EMA on a daily chart, very similar situation. But again, when we get these breaches, it generally leads to more downside, and we just haven't experienced enough downside yet. Also, notice that PMO, the monthly PMO, has now officially topped. All right, so let's take a quick peek at Bitcoin. I'll look at a couple more monthly charts for you too on the big four, but Bitcoin really interesting, making a nice rebound here. While the indicators are looking much better here for Bitcoin, I suspect it's going to find resistance in this zone, possibly make it to the 50. I'm still not so certain we'll even see that. You can see that there is a declining trend here. It's not even being challenged quite yet. So my sense is we're going to get to this 20, to this area of overhead resistance, and we're going to see Bitcoin fall back down. When it hits 30,000, that's when I'm going to be looking at Bitcoin as a possible buy, but I don't see it right now. Let's just go right into the monthly charts for our big four. And you can see here with the dollar UUP on a nice long-term rising trend, it's now hit very serious overhead resistance. There's a little zone in here, and it's trying to get above that, but it's now finding a little bit of difficulty. It was up a little over 1% this last month in January. And you can see that we did get a monthly PMO buy signal. So on the long-term look here on this chart, it looks like the dollar could break out at this point, given the way that monthly PMO looks. I like seeing that crossover. Let's look, I'm going to start with the gold's 1 year, because I know everybody's very interested in gold right now. Have this sort of rounded bottom here, dropped below that 200-day EMA, now is struggling to get back above it. Stochastics look pretty ugly. PMO looks pretty ugly. RSI is looking like it wants to turn back up. I'm still feeling fairly good on gold. I know this doesn't look like the best chart in the world, but we're holding that support at 1780. And if the market does decide to turn back down, I suspect gold will be getting a little bit more love. We can also see that investors, given the discounts have really tapered off, that they are feeling more bullish on gold, despite the price action. The monthly for the gold is, there you go. We can see, again, kind of a cup shape, or if you want to say a parabolic advance, we had the drop. And now it's just struggling to get above 1900, which is a pretty serious area of overhead resistance. PMO, monthly PMO hasn't turned around. Monthly RSI is still positive. Now we have kind of what looks like a maybe a symmetrical triangle here, or a flag sitting on this particular flagpole. So I think overall gold still has some shine to it. Gold miners. And you can see gold miners obviously had a nice rebound today with gold back above this area of overhead resistance, prior support. I think it looks pretty good here, but the problem is even with a 3% rise in prices for GDX and the gold miners, no improvement on participation. We still have, even with this big rally, no gold miners with price above their 20-day EMA. There's a lot of work that needs to get done here. I think that it's certainly possible that we're going to see the work done and we're going to end up with gold miners rising, but right now it's still a little bit soft. Oil, I think, looks good moving forward. In particular, if you look at the short-term chart here, you can see that we are still in a nice rising trend for crude oil. I've noted these bearish candlesticks, those black-filled candlesticks, have a bearish look to them. You can also see that we didn't come back up and test the top of this rising trend channel, which suggests to me that we might see a pullback to this level of support before we see oil resume. It's very overbought here. Indicators still look pretty good, but again, overbought. So it might require a bit of a pullback, or a little bit of a pullback here toward that support level. I think this week with the strength, we're going to find more bottom feeding going on elsewhere, and money will rotate out of energy somewhat. So that's kind of what I'm looking at with crude oil. I don't think it's going to have a big breakdown. I just think it's overbought, needs a little bit of a pullback. And we look at the monthly chart. Let's get the one with WTIC, much better look here. You can see with West Texas crude, we do have the breakout, a nice big double bottom formation. And if you do the calculation, that would put oil, West Texas crude, back here at its all-time high from 2008. So there's plenty of upside here. everything looks good. Overbought PMO, not going to lie, but RSI is not overbought yet. I would expect crude oil prices to at least come back up here and test those highs we were seeing back in 2011 and 13, looks like 12, somewhere in there. All of these tops, I think, are where we're going to see crude oil make its way toward. So I think it looks good. I just think in the short term, it's a bit overbought and needs a little bit of a pullback. Bonds doing all right here in the short term, but really messy. Yields have been really messy. And of course, TLT is going to travel opposite the 20-year yield. So with yields consolidating right now, bonds are doing just the exact same thing. We have sort of this diamond shape going on here, which could be a reversal pattern, but we do have the PMO. Everything's looking pretty good here. The RSI is still negative. And like I said, I just think that the picture is still too bullish on yields. We can look at the 10-year in particular here, holding a nice, strong rising trend. You can see that same sort of volatile movement, but overall still holding the rising trend, holding this support zone. I would expect to see yields continue higher at this point. All right, promised you a few more monthly charts. So I'm going to show you a few that I do have here. Here is the Dow monthly chart. You can see that the monthly PMO on the Dow 30 is turning over. So we're seeing that turn on the PMO. If we look back in time, turns on the monthly PMO are not good for the market, or for the Dow, I should say. So we're seeing that topping action going on here. So we do need to be very careful. Certainly, the RSI is positive, but I don't think it's a good look here. The month Dow 30 was down over 3% on the month, which honestly isn't terrible. But I do see a bugle or a megaphone type pattern here that suggests that that high volatility is still there for us, and volatility is generally not our friend. The NASDAQ 100, when we look at that monthly chart, buy signal that's come in, but we're now seeing a tipping over PMO, monthly PMO. So breach of that 10-month EMA. So there are problems going on here. You can also see sort of that bugle shape, not as prominent, I don't think, as on the Dow 30, but certainly NASDAQ 100, not a great month, down over 8.5%. And you can see also the RSI is tipped over. But most importantly, we've lost that PMO rising on the monthly chart. That's not what we want to see. These blue verticals in this case are market tops. And again, as you can see, when we get those turns on the PMO, it's generally not a good thing. The monthly chart for the S&P 100, similar look, but we don't have that monthly PMO topping yet, which is kind of interesting to me when I look at those other charts. But again, very volatile, megaphone type shape. Just have to be really careful here with that breach of the 10-month EMA. All right, I think that quite covers it for all of those charts. Now let's go ahead. I'm going to take you over and we will look at the sector candle glance. And as I've been demonstrating on a lot of the shows that I've been on lately, I set up my own candle glance so that I have my PMO on it, my 20, 50, and 200-day EMAs. Gives me a really great quick look with the information on that candle glance that I want, not the one that is default for StockCharts. Really easy to set up your own candle glance. If you'd like my candle glance style with some instruction, just send me an email, Erin@DecisionPoint.com. A lot of people have been doing that, and you can get my candle glance style, but you can also get my industry summary style, which I'm going to show you shortly. But let's go ahead and look overall at the sectors. When I was going over them on Friday to try and figure out what sector to watch, technology was interesting to me because a lot of price movement there are a lot of bottom fish there. And I feel like with this newfound strength, we've seen Apple, Visa, MasterCard, we're seeing a lot of those turning up. And so I think a lot of the focus is going to be on technology this week, but we really moved up very quickly here. So, we're already at overhead resistance. So I opted not to go with XLK, but you can see that we're starting to see a little bit of improvement across the board as far as momentum goes. And again, there's XLE kind of tipping over here with that PMO suggesting, as I said earlier, it's overbought, needs a little bit of a pullback. And now there are plenty of other areas where there's strength. And so we're going to probably see the money rotating out of there for a little bit. But when I looked at all of these, XLU stood out to me last Friday, had that bounce off the 200-day. It did not break down below it like we saw with industrials, with materials and XLV. No breakdown below the 200-day EMA. Staples and energy, same thing. So I like what's going on in utilities. So I'm going to probably concentrate there a little bit more on the industry summary, but let me show you under the hood. And again, these charts are available to our subscribers on our website in our sector chart list. So nice look today, big rally. Looks like we have a breakout from a declining trend, if not very close to it, very high volume. PMO is turned up, RSI is now positive, but this is what really came to the forefront for me. Is on Friday, we had this really nice increase in participation. And my guess, after a big move like we've seen today, we're going to see quite a bit more stocks above their 20 and 50-day EMAs. Stochastics were already rising. They're continuing to rise. And we can see relative strength overall for this group is been trending up. Not so great in the last month, but I think that this might be an area that will see some love. It's still got some internal strength going on here with a silver cross at 82%, a golden cross index at 93%. There's still a lot of health going on here. And with some of the improvements I'm seeing under the surface, I like it very much. Now look at technology's participation. Granted, certainly an improvement, and this was as of Friday, certainly an improvement, but not anything like we're seeing on XLU. Look at that kind of an improvement. That's what I'm looking for. Not seeing that just yet on technology. There are a lot of bottom fish there, but there are also some that really could go down further. So enjoy a little of the short-term strength. I think that it's going to be good for technology to see some of that strength. That's where we're probably going to see it, but again, I don't think it's going to stick. So we'll go back to our candle glance. Okay, so I'm looking at staples. They're hitting overhead resistance, but again, really nice day today. We've already talked about how energy is kind of looking toppy. Consumer discretionary, very much beat down, but now it has to face the 200-day EMA for overhead resistance. Comm services has been doing terribly for quite some time. Financials, we're starting to see a little bit of the PMO rising here. Same with healthcare. I've noticed pharmaceuticals are looking particularly good right now in that healthcare area. But let's look at that industry summary and start making some determinations here. So what I've done here is I've set up my own industry summary candle glance. And again, if you'd like this with instructions on how to create this, I will forward it to you. Just send an email to Erin at DecisionPoint.com. But we were going to concentrate particularly on utilities and technology. So if we're going to look at technology industry groups, where is the internal strength? So like I said, we're going to see a lot of stochastics turning up. and PMO's trying to turn up. What I want to see on this chart is a PMO that has turned up, and preferably price being above that 200-day EMA. I don't know with technology being that hurt that we'll see that, but here we go. This is a good one, computer hardware. PMO has moved swiftly upward, stochastics looking good, and now prices above all of the three major EMAs. So computer hardware might be a good place for bottom fishing. I'm not so happy with this look of this telecom chart. This is looking okay in the computer services, but you've got the 200-day EMA as overhead resistance. Here's another one, 200-day overhead resistance, and PMO not quite turned up yet. Semiconductor above that 200-day EMA, and we're seeing a little bit of improvement under the surface, but overall performance of this group you can see continues to dwindle. Software, I think, is interesting, but again, not above its 200-day EMA quite yet. So you want to be careful there. And renewable energy, I've been watching this sector because I know there's a big bargains to be had here, but I'm not seeing the reversal quite yet that I want to, although that double bottom does look interesting. So I would say if you're going into the technology space, the industry group of computer hardware looks the best. And utilities, which was my sector to watch last week, gas distribution looks good right now. Multi-utilities look pretty good here. You've already got the PMO turning up. Look at the stochastics here. Conventional electricity, big breakout today, looking pretty good, and a tip of that PMO. Water not doing quite as well. If I'm going utilities, I would stay out of that particular group. I like gas distribution and the multi-utilities industry group best. Given that, let's look at the diamonds of the week. So the first one I have for you is BEPC. This is in multi-utilities, really beautiful looking chart. RSI just now moving positive, breakout above the 20-day EMA. PMO, a new crossover today. And you can see that the stochastics are rising, not quite above 50 yet, but going the right direction. The group itself is pulling back a little bit with relative strength, but overall, you can see BEPC is starting to trend up against the S&P. And finally, the last one I have for you is SWX, Southwest Gas Corp. Look at this beautiful V bottom on this chart. And we have the breakout above the 50 and the 200, managed to avoid a death cross, 50 RSI above 50, PMO on a crossover buy signal. This would be my only concern here is against the SPY, it's not performing as well, but you know, it's been up anyway. So I wouldn't throw it out of bed for that one, that's for sure. So I do like Southwest Gas, and that is in the gas distribution area. That is all I have for you today for the Decision Point Show. Thanks for joining us, and I will see you next Monday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.